If you're looking for an awesome product at a great price, be sure to check out the link in the description. UK house prices are showing signs of a resurgence, recovering from a brief downturn earlier in the year. Market data reveals a positive shift in the UK housing market, with prices experiencing growth last month. This rebound follows a period of adjustment in June, after the expiration of a stamp duty tax break. According to Nationwide, the average price of a home climbed by 0.6% in July, reaching £272,664. This marks a notable recovery from June's decline, which had been the largest month-on-month decrease in over 2 years. The UK's largest building society also reported an improvement in the annual rate of house price growth, which rose to 2.4% in July, up from 2.1% the previous month. Furthermore, the level of purchase activity remains robust, with 64,200 mortgages approved during the same period, demonstrating continued buyer interest. Adding to the positive outlook, Nationwide indicated that the affordability of purchasing a property is now at its most favorable level in over a decade, though it still presents a significant financial commitment. Robert Gardner, Nationwide's chief economist, noted that the price of a typical UK home is approximately 5.75 times the average income, representing the lowest this ratio has been in over a decade. He suggested this factor is helping to alleviate the deposit constraints for potential buyers, aided by an increase in the availability of higher loan-to-value mortgages. However, challenges persist. Nationwide also acknowledged that borrowing costs remain elevated. The interest rate on a typical 5-year fixed-rate mortgage for a buyer with a 25% deposit is now more than 3 times the levels observed in the autumn of 2021. Despite these existing hurdles, experts express cautious optimism for the near future. Jeremy Leaf, a London estate agent, commented that transactions are currently holding up relatively well. He further expressed expectations of a modest overall improvement in the market, particularly if interest rates are reduced, as is widely anticipated in the coming months, notwithstanding lingering concerns about the wider economic landscape. The expiration of temporary stamp duty cuts in England and Northern Ireland in April added substantial costs to numerous transactions. The market's response to these developments reveals the complex interplay of factors influencing the UK housing sector, from government policies and interest rate fluctuations to income levels and consumer confidence. The recent gains suggest a resilience within the market, despite these considerable headwinds. The future direction of house prices will depend on how these varying influences play out in the coming months, and whether the current positive trend will persist. The data provides a snapshot of a market navigating a period of readjustment,